Hi, welcome to the Market Alert for Monday the 24th of August 2015. And just before we get into the details, the markets are down severely on the overnight session. Just to show you this from Zero Hedge, let's just have a quick look at the news. We've got Black Monday, Shanghai Composite goes red. You can see that here, you can see they're down. Coming back now. Before they had the major bull market, over 60% of the market lost since, well, in a matter of weeks. Took several months to get up there, but down in a few weeks. US equity futures are crashing. Very interesting picture there as well, because the market was fine, and then somebody just put in a massive 30 consecutive bid level and sent the market down 48 points, and just down. This is the S&P down to 1923, 2.5% in one trade on the overnight market, and the 10-year notes, the yield slides under 2% as well. And as they say, the markets have lost faith in monetary policy. Well, there's a surprise. You can't keep printing. It's a disaster from the start, and I wrote about it in 2011 that this would fail big style, and now you're starting to see it unfold. This is not a normal market correction. This isn't the usual nonsense of the market's correcting to then go back to make all-time highs. This is the start of the biggest bubble in history starting to unfold and unravel. Commodity index hits 21st century low. And I absolutely love this. This is obviously a parody of the Jaws film when the shark first appears. And the chap, I can't remember his name, that was on the boat, said, when he saw it, he said, you're going to need a bigger boat. And this is just obviously satirical. They're going to need a bigger balance sheet, and that is absolutely right. And again, I can't disagree with this either. Anybody that listens to the mainstream media pundits, talking head or spokes bimbo deserves the reaming they are going to receive, because they will not talk about the QE and the impact that it's going to have on everybody's lives, the bail-ins and all the rest of it that I spoke about on Saturday. They will just not touch this stuff. And anybody that has done, Peter Schiff, Gerald Celente, and many others, are being sidelined. They're not allowed on the mainstream business channels or news anymore. Crude oil drops below $40 a barrel as well on the overnight market. And what else have we got? Well, the rest is just the more of the same thing. So a very interesting overnight picture there, of which you can see here, just to show you crude oil now below $40 a barrel. I said on Saturday, $32 is where it's going. It's going back to the 2008 lows. No doubts about that. Every low gets retested at some point. But coming back to the markets and how we can take advantage of this, on Friday the volatility was huge, and this is why we got no signals in the first part of the session. So let's go to the PTI. The PTI is the one you want to be looking at the moment, because the market's trading to all of these psychological levels, mainly to the downside. We have the setting of 8 and 25, and you will see that we're going to have to increase this to around 40 to actually bring in any sort of signal, because the range of the bars have increased. Now, of course, when you mark up a trade on one of these increases, you will see that we're looking at 66 point potential risk on a trade. Well, that's fine. That's not an issue. The issue is how much you're actually risking on the trade. And again, if you change this so that and adjust it accordingly, so that you're only risking 1%, so you'll change the bet size down from £1 to probably 30, 40, 50p, so that you can still actually do the trade. And that's the only way to get around this sort of volatility at the moment, because if we keep the settings as normal, 25, you will see there was only one trade on Friday, which was in the evening, which wasn't so bad because it still produced a lot of profits. So you've got two choices here. You can either adjust this for the volatility, and of course with volatility comes slippage as well. I've got to warn you about that as well. It would be remiss of me if not to tell you this as well, because we are going to see a lot more volatility over the next few days. Big swings either up or down as well. Even though we've got short trades at the moment, be warned, Yellen and co are not going to like this, because this is going to they were late in their decision to actually increase interest rates. They knew they couldn't, because the biggest bubble yet, the bond market, hasn't started to unravel, and that would have done had she have increased interest rates, and that's what they were concerned about behind the scenes. This is why they were vacillating and delaying on that decision. So make no mistake, they will do whatever they can to keep this Ponzi scheme alive over the next few days, and if it means printing more money, they will print. It doesn't affect them. Their pensions are secured, their autobiographies, the fees from that, they're secure. They don't care about the generations to come that are going to have to try and pay back this debt. So they will do anything to keep the bankers happy by printing money. And in fact, there's already tweets that have appeared asking where the Fed is to actually do something about this. And we're not even started to see it unravel on a big scale yet. We're only seeing a few down days of 500 points. So be warned. Greater volatility and bigger swings means that there is a chance of more slippage as well if you are trading. The second thing is that the evening session tends to be a bit like the normal morning session would have been, given normal circumstances. So the evening session may be better if you don't like the volatility in the earlier part of the session, if you make the adjustments in the PTI there. So you can see there the market was quieter and then it sold off towards the end. On the overnight market, we're down another 500 points at the moment. You can see this, and that's the major sell order that went in on the S&P, driving the prices down. The market's bounced back a bit. We're coming off the what have we got? The 16,000 level. This is a very important level. This is, you can see how the market's bounced off this. It's traded back up to 16,100 and is sitting around there at the moment. The 16,000's broken. Expect the market to move lower as well. You can see they tried to buy back in the market here at the 16,100. The market failed, and 16,000, very important level. We're down 2,000 points now since May. And again, we just don't know what the Fed are going to do. We don't know what the knock-on effect to the derivatives market's going to be just yet. If it's a correction, well, fine, we'll see the market rally back. And to be honest with you, I want the market to rally back. I don't mind if the Fed come out and print another trillion. That's fine by me, because that will bring the market back up. If we have a look at the daily chart, that will bring the market up. And that will allow us to actually then sell back into it and hold the position longer term, as opposed to just trading the 5-minute chart as well. So I'll just narrow that a bit. So that's what we're looking for. We're looking for a bounce back, but that's the current current picture. In fact, I don't think that's actually right. It should show where are we trading at the moment? 6,000. That's not actually updated. Let me just reload this workspace, see if it will bring the correct picture up. That's more like it. That's it, 16,000. So let me just go back there. I thought that didn't look right. So there we've got the market down another 500 points there, and we want to see this market bounce back, whether it's funded by the Fed or a dead cat bounce from short covering. It doesn't really matter. We want to see the market rally back from this high down to this low and move back, and then we can. There's going to be weakness down the line, just the same as there was in the crude oil market when everybody thought that was over. Let me just show you what I'm talking about here. There's the crude oil market. When this sold off, the market bounced here. It didn't bounce too much and then continued its decline, and that's what we're looking for. That's sort of what's known as a dead cat bounce in prices. So don't be surprised if this market moves higher today, even though it's down on the overnight market. I've seen this before as well, where the market's been down, the buy-ins come in, the short coverings come in, and the market's being allowed to move higher. And the reason for that is that everybody thinks it's going to go lower because of what's happened on the overnight, only to find that they get squeezed when they try and go short and the market moves and goes back to the upside. And again, just switching back to the daily chart, there's got to be some sort of testing in this market, i.e. these blue bars at some point, so watch out for that as well. Let's just have a quick look, see if there is any other economic news. There's nothing else out. Lockhart speaking at 5 to 9 this evening. He may talk sooner actually, and it will be very interesting to hear what he's got to say, unless they wheel out Yellen at some point during today as well, as this continues. Certainly the 2:30 session is going to be an interesting one, as is the pre-market really, to see if prices can actually move back towards the upside there. And finally, in the implied volatility, a big clue here, massive clue. We've seen the biggest one-day rise ever that I've ever seen in the implied volatility, and guaranteed with the overnight activity as well. We are over the 100% mark, and again, another reason why we could see a bounce, even though we've got the carnage in the background. Longer term, market's heading south, but in order to do that, you will get brief rallies in between, and also sideways trading as well, a bit of support, so keep that in mind as well. Unless, of course, China, which sells off further, that will put some downward pressure. But certainly be warned, there will be days when you get big spikes to the upside as well as the downside during this type of market activity. Right, that's it for this morning. I will report in if I see anything during the day as well. But other than that, see you in tomorrow's edition of the Market Alert. As ever, thanks for the feedback from Saturdays as well. Very much appreciated. Any other comments you have, then let me know. Other than that, see you tomorrow. Thanks for watching.